Hey everybody, Jake here with Jake Wu Market Research to go over the charts into the final days of the first month of the year. And so far it's been a pretty strong start to the year after the first week was a little bit red, but that was much needed and healthy. So we'll touch on some futures names, ES and QCL, Bitcoin, and then go over some individual names as well. Before I jump in, just a reminder, I do have a $10 a month Twitter subscription that goes over these charts in a lot more detail. So if you are interested in, price levels to watch on both the upside and the downside, different chart setups that have favorable setups for upside going into the week ahead, definitely check out the Twitter subscription. The link is in the video description. It's simply just going to my Twitter and clicking on subscribe. And as I mentioned, it's only $10 a month. I do daily analysis and weekend updates, looking at the daily chart and the weekly chart on the weekend updates, and then simply just updating the daily chart during the week. So jumping into it, we are looking at futures. So remember, I do have a futures partner, a futures broker, Optimus Futures. I also post futures charts on their Twitter page every morning. So I posted the link to check them out if you are interested in potentially starting up a futures account. One thing I will mention, you can actually tie them in to TradingView. So if you still want to use TradingView charts, but you want to use Optimus Futures to clear your trades, you can do that. And as I mentioned, I will post the Twitter name and link to their account as well if you do want to check out some futures charts that I post every morning. So let's jump into it. ES, a pretty strong week, a little bit of a pullback on Friday, but overall a pretty strong week here. And one thing I want to mention is we're getting close to this 1.618 extension here. And a 1.618 extension is really important when you have nothing to look at to the left of the chart. What does that mean? It means that we're at all-time highs. And when we're trading at all-time highs, we really don't have anything to look to the left. We don't have any VWAPs to look at. We don't have any gaps to look at. We don't have any pivots to look at or previous resistance zones. So what you really want to do is use the 0.618 extensions. And so that is essentially a Fibonacci extension. And, there's a little bit of an art to using these. You definitely want to make sure you pick the right measured move. And so the measured move that I used for ES here was simply just the highs that we saw in July, connected them with the lows that we saw in October. And you can see this little dotted trend line here. That's the measured move that I'm measuring. And then the 1.618 extension is right here around 49.51 on ES on the futures. So we are nearing that area. That is definitely an area to watch as potential resistance, but also a target above. Now, one thing I'll mention here is we also do have this diagonal trend zone above that does show that price could move up a little more before we have any type of potential resistance here. And going into next week, that would be anywhere from around 5,000 all the way up to around 5,055. So remember, anytime you're looking at diagonal zones, you essentially have to look at the next week, right? So if we moved straight up next week, this would be the area. If it took a little longer, let's say it took a few more weeks, then all of a sudden you're looking at this area, and that's going to be a different price range because it's diagonal. It's a function of time. The slope of the line changes the areas that you want to watch on a week-to-week or candle-to-candle basis if you're looking at a different time frame. So going into next week, potential resistance 1 is 49.51, which is your 1.618 extension. And then you also have this resistance zone higher. Now, the thing is, we do definitely have some economic data and just overall Fed stuff coming out next week. So that's something to keep in mind. And there's actually on the daily chart some indications that we could be, getting close to a potential short-term top. This is using simple indicators, but indicators only go so far. You also have to have price triggers. And one thing I do in this subscription is go over, okay, the bull thesis triggers here. The bear thesis triggers here. If price does that, then this thesis triggers. So keeping things systematic is really important when looking at the markets. And so you can use indicators, but you also have to use price action to confirm those readings that you're seeing on the indicators and have triggers in place. So that is really ES. We've had 3 strong weeks in a row after starting the year off a little weak. But all in all, not a bad candle going into the week ahead. But as I mentioned, there are definitely some things to at least note, and I'll be going over those in the subscription this weekend on the daily chart. Going into NQ, we are trading right at this resistance zone. So we just talked about the resistance zone on ES. We're not there yet, but on NQ, we actually tested it last week and this week. We actually broke out of it intra-week, but we closed right at the top of the zone. And you can see here that we've got this ascending wedge forming. And so an ascending wedge, a rising wedge, whatever you want to call it, pretty much the same thing. It's just a different way of saying it. You can see here that we are getting close to the apex of this setup. So an apex is essentially just the end of the setup. So getting close to the point here of the ascending wedge. So one thing I'll mention is, generally, statistically speaking, these can be bearish setups. However, as I mentioned in the previous chart, you have to have a trigger. So right now, there is no trigger either to the upside or the downside because price is still trading within this area as a function of the weekly close. Just because you have a breakout during the week, you do need to have a weekly close or whatever candle time frame you're on. If you're on a daily chart, you need to have a daily close above that area to invalidate or to consider that a breakout or a breakdown. Same thing here. Literally, the weekly close is right at the top of this trend zone, and that's something to really keep in mind going into next week, that we are at this potential resistance zone. Some may call this pretty close to a shooting star going into a pretty important week. A lot of earnings coming up soon. This is definitely something to keep in mind for potentially the bear thesis, and I'll go over more on the bear thesis in the Twitter subscription this weekend. Another thing that is definitely probably spooking some people is crude oil is finally catching a bid after pretty much being range bound for about 2 months. We did have a very strong move to the upside, and really it was just kind of a technical breakout. You had a breakout through the diagonal trend zone that we were watching for quite some time. If you want to see what that kind of looks like, you pretty much just had this basic trend zone here, and we broke out, and then you had a continuation up towards the September pivot VWAP. So this VWAP zone is really crucial here. One thing I'll mention is I did add a secondary band. So essentially you can see here that I have a 1% upper band offset. What does that really mean? It means that I added essentially another VWAP 1% higher than the actual VWAP to capture some of this price action up here. Now I could go and I could try to capture all of this price action, but in that case, if we did that, let's just do 2.5 and see how close we are. If we did that, we would have such a massive range going into the week ahead. So if you did want to capture all of this, meaning that you wanted to capture this wick that did break above, you wanted to capture this open pretty much right at this VWAP at 2.5% above the actual VWAP, you could do that, but you have a pretty large range. The thing is, if you wanted to use a range, you can pretty much say, okay, if we're at the bottom of this VWAP zone, we're just now slowly starting to get into the bottom of this potential resistance zone. As you move up higher and higher, that's when you can see, okay, we're starting to get closer to the top of this. Maybe this could be resistance like it was back in October and then both October, so early October, mid-October here of 2023. So you can always use these zones as kind of scale out points. If you're long oil and you want to maybe take 1/3 off a position at the bottom of the VWAP zone, take another third off at the middle and a third off at the top, or you use the top of this VWAP zone as your breakout point if you're a breakout trader. There's a lot of different ways to do it. So, this is definitely a little subjective in how to apply these zones. But if it were me and I wanted to capture all of this price action, I definitely would do more of the 2.5% offset. And you can see here that that's a pretty wide range, right? Going into the week ahead, that ranges from anywhere from 79 a barrel all the way up to around 81. So seems like a lot, but not that much. It's only $2, maybe a little over about 2.5%. And, oil can have overshoots just like anything else in the market. So going into next week, definitely from 79 all the way up to 81, that is your zone that you want to watch as potential resistance. And if we break out of that, that could spook the market. That could potentially bring the inflation issue back into play. Higher oil prices, naturally, you're going to have higher prices in many parts of the economy. So just keep that in mind going into the week ahead. Bitcoin had a little bit of a breakdown this week through the October breakout VWAP zone. So this October breakout is really the area that I anchored this VWAP. If you follow Brian Shannon on Twitter, awesome. If you don't, you definitely should. He's essentially the grandfather of the anchored VWAP and where to place anchored VWAPs. An anchored VWAP is essentially measuring the volume weighted average price from a specific point in time. He taught me, and he teaches everyone in his book and in his just Twitter posts, you want to anchor from status quo changing points in the market. In this case, we broke out of this previous resistance zone. So this is a status quo change in the market. We had a change really in the dynamic of the market and the structure of the market with this breakout. So you can see this is where we want to anchor the VWAP. And you can see price pretty much rode along that all the way up. We then retested these highs that we had back in March of 2022, rejected right at this area after the ETF news. And now I'm doing this video on Friday evening. So at this point in time, we're kind of forming a little bit of almost a dragonfly doji, hammer, whatever you want to call it. Generally, dragonfly doji, you want to have a little less of a wick there, but regardless, we're not anywhere near the end of the week. The end of the week for Bitcoin ends on Sunday. So this will change. The main thing I would focus on is a weekly close below 39,700 would definitely trigger a bigger move to the downside to this September pivot VWAP zone, which ranges anywhere from around 37,000 all the way down to around 36,000. So right about $1,000 range here. However, if we do move to the upside, definitely this previous zone here, ranging at this point right around 47,000 to around 48,200 would be your potential resistance zone above and target if we do get some upside going into the weeks ahead. You can see a little bit maybe of a flag here forming, but all in all, the main thing I'm focused on is the fact that price is holding above this October breakout VWAP zone. And this particular zone is just a 2.5% upper band offset to capture some of these candles here that price did test the top of this band. And even if we took it off, you can see how well price respected this VWAP in general. But notice that we only tested it actually once. I want to have a zone that essentially, the more times a candle or candles touch a zone, the more important it is. So that's why I added a 2.5% offset, because then with the 2.5% offset, look at how many candles we're capturing here. And that means a lot more to me than just a single VWAP. And VWAPs are important, just a single VWAP as well. But for me, I like to use these zones because it gives you a little bit of a margin of error. So very simple. You just go on TradingView. If you want to add it, go to Forecasting and Measurement Tools, Anchored VWAP, and it's right there. If you want to look at the settings that I'm using, I'm essentially using the source as the open, high, low, close. If you're looking to add one of these percentage bands that I've gone over, it's not the standard deviation band, it's the percentage band. So that's something, if you want to apply this to your chart, those are essentially the settings that you want to use. All right, let's go into some individual names. Mara, this has been one that finally caught a bid this week after Bitcoin finally caught a bid. There was a volume shelf that really was holding pretty well across the board for the week, and then finally we got a little bit of a launch off that volume shelf. That was a daily candle chart that I was posting pretty much throughout the week on Twitter. But you can also see here pretty much from the October pivot, this VWAP zone has really held pretty well here. You can see that, a decent candle here, definitely a piercing pattern on the weekly candle chart. But all in all, these are definitely a proxy for Bitcoin. So if Bitcoin makes a big move, miners likely will follow. So you do have to kind of look at Bitcoin as well, not just the Mara chart. But in general, a pretty strong candle here. This is something that I am going to initiate coverage on in the Twitter subscription. So I haven't really been doing daily posts on this. I've just been doing it on the public feed, but I will be doing more detailed analysis. When does the bear thesis trigger? What's the next level of resistance if we continue up? What's the level to watch if we do break and close above that? So that's something I will be posting this weekend as well in the Twitter subscription. Full details on the Mara chart for both the weekly candle and the daily candle. So different time frames can show very different pictures, and so I'll go over that definitely going into the week ahead. But all in all, right now we are holding the anchored VWAP pivot. Bitcoin's looking decent here. We do need to wait on a weekly close to see how that weekly candle closes before we get too excited. But overall, that big wick on Bitcoin definitely shows that you did have some buying coming in and sellers kind of exhausting here. Going into NVDA, this thing is just an absolute machine. It does not stop. We did have a little bit of a pullback pretty much from the Intel earnings on Thursday evening. That kind of pulled most chips back a little bit, chip names in to the last day of the week. Excuse me, I can't talk. But you can see here that we definitely still had this weekly close above this zone. You can see that we technically broke out of this area. If I take away this green circle, we technically broke out last week above this trend zone, but we definitely continued to hit new highs here and continued the breakout. Now, one thing to note here is if we turn on the 1.618 extension, we already broke out of that. So what do? We have to add the 2.618 extension. That's essentially the next extension you want to watch. We have nothing to look at to the left of the chart because there is no price action. There's nothing to really reference, so we have to use these extensions. These extensions are used by definitely institutions, money managers, so that is why they're important, because they kind of become a self-fulfilling prophecy. And in general, the Fibonacci sequence is a very interesting sequence of numbers and just ratios and how that occurs in nature in general. If you ever want to kind of go down a rabbit hole, look up Fibonacci sequence on YouTube and you'll find some interesting things. These sequences and these numbers, and they don't just happen in the market. They happen in nature across the board. And I used to really not think too much of Fibonacci until I did have someone present to me I think I was at a conference and someone went over Fibonacci, just zones, levels, extensions, how they work. And it's pretty incredible. I personally only use the extensions because if I'm looking at something within the measured move, I'm going to use the pivots or the gaps or the VWAPs as potential resistance or targets. But outside of that, and if we're hitting new all-time highs and there's no price action to the left, I'm always using 0.618 extensions as potential targets and resistance. So I pretty much took the measured move from the August highs, connected that to the October lows. That is the measured move. And then this is essentially the extension that you get. The 1.618 extension we already broke through. The 2.618 extension is the next one to watch above. That's currently at 681.22. This is the weekly extension, right? If we go on a daily extension and you take a little bit of a different measured move from the November high to the December low, you're going to get a slightly different extension. So depending on what time frame you're on and what measured move you're using, these will change. And I would recommend going into the daily chart, going over which extension to use there, the 1.618 to 2.618, and then for a longer term kind of area to watch, you can use the weekly extensions, and so that will give you multiple different price targets and potential resistance and just in general levels to watch. All right, let's talk about Tesla. Just an absolute bloodbath here. My gosh, this was interesting because this, on the daily chart at least, had one of the strongest technical setups I've seen in a while. Now, I posted that on Twitter, that I thought we were going to get a move up, and I was definitely wrong on that. I am wrong pretty often. I mean, everyone's got things that they think is going to happen in the market that they get wrong, right? And I'm always the first person to admit that, hey, I thought it was going to do this and it didn't. The technical setup was there. We had a 20% move down pretty much for the month. I thought a lot of that bad news was priced in, but leave it to Elon to really just spook people with his conference calls and just some of the things he says really can get investors a little spooked. So as we saw, we pretty much broke down below the January 23 pivot VWAP zone, and that was another part of my thesis. We were at this zone. We were at this pivot zone. We had a bounce multiple times over the last several months and pretty much a year, and we did not hold this time. It happens. That's a breakdown, and so that's something that indicators, especially going into an earnings event, are not as reliable as they are when you don't have a binary event like that. And that's something I mentioned on Twitter. Hey, the setup's there, but earnings always has inherently more risk when you are entering a binary event like that. And we got a big move down. Congrats to those that did take the short side of that. Some big money to be made with that move. At this point, we do have this trend zone here. Interestingly enough, this was previous resistance back in April of 2022 and September of 2022. If you extend this out, you can see that this area then acted as support multiple times over the last year or over the last 6 months. And each time we've been here, we've had a bounce. Now, notice I have red, red, green, green. Well, these are red and green because we know that these were resistance and support zones after the fact. I have this as yellow because we don't know yet if this is going to be a support or resistance, a support zone. It has been in the past, doesn't mean it is going to be in the future. And, that's why we have these technical triggers to look at. So in the Twitter subscription this weekend, I will be going over, what's going to trigger this to not essentially be potentially a bounce case anymore. And at this point, this is 6 red weeks in a row. And if you go to the historical chart, going back to the IPO, this is only the 4th time this has happened. We've only had 6 red weekly closes in a row, 3 other times. One of them happened in March, April of 2014. Another one happened in December into January of 2016. And then the other one happened in August, September of 2016. Just because we had bounces after this short-term bounces, may I add, does not mean we're going to bounce this time. We could easily go for a new record of 7 red weekly candle closes in a row. Who knows? I have no idea. All I can do is look at the historical performance and see what's happened. I've had people say, "Oh, well, this is different. We weren't in a rate rising or a raising rate environment." Well, we're actually arguably going to be in a lowering rate environment coming in the coming months. We'll see what the Fed does. But all in all, sure, there's always going to be differences between what happened in 2014, 2016. The whole point of this study and this observation is just to point out this is the 4th time we've had a 6 red weekly close sequence in a row. That's it. Now, interesting back test. 2 weeks after, in April of 2014, we had about a 10.7% move to the upside. In February of 2016, when we bottomed here, we had a very big move to the upside, multiple weeks. So that was an actual bottom. Notice here in March and April of 2014, we had 2 weeks to the upside, but then we hit a new low. But after that low was put in, a new lower low, that was definitely a short-term bottom, and we did continue to the upside for months. This one in August of 2016, we did have a 2-week move up. I think this was about 6.7% if I remember correctly. But you can see here that after a big sell-off like this, you definitely have these short-term bounces. And if you think about it, if you have a stock that goes up 6 weeks in a row, some people are going to take profit, meaning that if they bought it low and they're selling high after 6 weeks straight up, they have to sell to make a profit. Opposite, if somebody's shorting the stock and it's down huge over pretty much 25% in 6 weeks, in order for them to take profit, they have to buy the stock back. That's called essentially short covering. And so that can create artificial demand in price. I'm definitely not convinced by any means that that this is a long-term bottom. But if we are looking at what's happened in the past and just a technical side of things, there have been bounces before after a sequence of events like this. This does not mean it's going to happen again. It's an observation and something to consider. On top of that, we do have pretty much the RSI on the daily chart at the lowest it's been since the 2023 reversal. That's something that I've been posting about on Twitter. So if you want to check that out, just go to my Twitter and scroll down and you'll see that chart. But just something I wanted to mention, kind of a fun fact, if anything, just an observation. And there's always more things you have to look at than just an observation like this before you start a position. But, something to consider. If you really wanted to get, bearish here and really look at the longer term trend, the longer term trend is way down here. Now, do I think Tesla is going to go below 100 or 50? No. But it doesn't matter what I think. It's what price does and what the market does as well. My personal opinion, I think Elon has spooked, some pretty big investors and some people that have been very bullish on him are maybe starting to pull back a little bit. And, sentiment is not good one, around Tesla, two, around Elon Musk right now. Sometimes it pays to maybe not make some of the people mad that you've got money. They've got money invested in you. So all in all, no real opinion on Elon Musk. Just from analyst comments that I've read since earnings, it definitely seems like some of these analysts who have been super bullish on Tesla are starting to become a little more neutral or pulling back some of their targets. Still, though, there's a lot of analyst targets that are much higher than the price is currently right now. All in all, we'll see what happens. Apple is one that had a really strong move off of this, at this point, ascending triangle support zone over the last couple weeks. And you can see here that we have pretty much a shooting star candle after rejecting at these previous highs, or essentially this ascending triangle resistance zone. And going into next week, there's, as I was mentioning in the subscription, there really was no edge into the second half of the week. Price was trading in between two horizontal zones, the all-time high zone and the previous support zone, which kind of flipped to resistance and then potential support again. But now there's really no edge here. I mean, you could say, oh man, this looks bad, but then look at this candle here. We had a pretty similar candle here, and that pretty much told us nothing about the following next 3 or 4 weeks. So, I wouldn't look too deep into this. I would say that you do have more of a shooting star at this resistance zone, which we did not really have before. But you could also argue that we were at this previous pivot here, and we had this shooting star candle. So all in all, let's see what happens going into the week ahead. I'll post the bull and the bear thesis triggers in the subscription, and then targets on both of those theses in the weekend update. AMD is really just on a tear, and it has been for quite some time, pretty much since the October pivot here. We did break out of the previous all-time highs last week. This week, we continued to move higher. Not what I'd call the best candle here, kind of a spinning top candle here going into the week ahead. You did have a pullback. You retested this previous all-time high zone, which previously was potential resistance. We broke through it like melted butter. But then we did pull back and tested the top of this zone. So going into the week ahead, we'll have to see. Intel's earnings, in my opinion, don't really matter because clearly they mattered a little bit because price moved back. But I think, you had more of a technical pullback, and the Intel earnings were just kind of your news event. If you want to think of technical setups and news events, think of a volcano, right? Volcanoes erupt when you have an earthquake or something that really triggers these underlying forces under the volcano, right? You've got gases building up, all of that stuff. The earthquake is really what triggers these volcanoes to erupt, right? Same thing in technical analysis. Supply and demand, they're at a point where they're ready to make price move a certain way, but sometimes you just simply need some type of news event, and that's kind of your earthquake in the technical analysis analogy. So something to consider. Pretty much until we close below the bottom of this zone, right around 158.90 on the weekly chart, we're still definitely in an uptrend. The 1.618 extension is all the way up here at around 232. So all in all, this is a long-term breakout. Easily could retest this zone multiple times. That we had a little bit of a pullback this week, but I wouldn't necessarily call that a true SR flip. But we'll see what happens next week and see how the market reacts to some of these events in the coming week. Microsoft is a very interesting one here. One, it's really dethroned Apple as kind of your market leader. This is now the most valuable company in the world, and it, in general, is been hitting new highs, as Apple has not been hitting new all-time highs. One thing I'll point out here is, one, we're at this diagonal resistance zone pretty much originating from the August 2022 highs, but you can also see that we're right at this 1.618 extension. So you essentially have a confluence of the extension and the resistance zone above. Now, I say resistance zone because it was previous resistance. Does not mean that it's going to be resistance this time, and that's why we have these bull thesis triggers, these bear thesis triggers, because you need price action to confirm what you're seeing on the chart. And that's really important when you are doing technical analysis, is to have a trigger in place rather than just saying, oh, we're at previous resistance, that could be resistance again, I'm going to do XYZ. you kind of wait for things to play out. You need to go on lower time frames, see if the lower time frame levels are holding, and then that will give you a much better view of what's really going on in the market. And as I mentioned, I will go over this name as well on the daily chart on the Twitter subscription and the weekend update. But for now, we are at this 1.618 extension, closed slightly above it at 402.21. Going into next week, this resistance zone above goes anywhere from around 408, or let's call it 409, all the way up to around 416. So there is a 2.618 extension on the daily chart that's right around, I think, 418. And so that kind of aligns right with the top of this resistance zone or potential resistance zone going into the week ahead. All right, hopefully this video was helpful. One, giving you a market update into the week ahead, into the final days of January. And two, hopefully is educational on some of the Fibonacci ways to use Fibonacci extensions, especially the 0.618 extensions, and just overall a different perspective in the market going into the week ahead. As I mentioned, if you are interested in futures trading, definitely check out Optimus Futures. I have a partnership with them. You can tie them in to TradingView, so you're still using TradingView charts while using them as essentially your futures broker. And then once again, the Twitter subscription, the link is in my profile. So if you want to check that out, just go to the video description and you can check that out. It is right at the top of the description. And if you have any questions or comments, feel free to leave a comment. If you enjoy these videos, definitely like and subscribe. And if you are new to the channel, definitely check out some of the other videos I've made. I've made a ton of educational videos to explain a lot of the different ways that I look at the market. So, helping you essentially speak the language and understand the terminology that I use, it definitely helps a lot. So all in all, that is all I've got for this update. Have a great weekend, and we'll see you next time.